As the year draws to a close, side hustlers across the country begin thinking about more than holiday shopping, end-of-year clients, or finishing projects. December is the most important month for taxes, and for anyone earning money outside of traditional employment, it is the final opportunity to make strategic moves that can lead to significant savings. Most people wait until tax season to worry about deductions and paperwork, but by then it is often too late. The real tax advantages happen before December 31st, and for freelancers, creators, gig workers, and online entrepreneurs, these opportunities can be worth thousands of dollars. December is the moment to become intentional, organized, and proactive because the IRS rewards those who plan ahead rather than those who scramble in April. Side hustlers face a unique challenge compared to traditional employees. When you have a day job, taxes are taken out automatically, benefits may be covered, and expenses are minimal. But when you run a small business or earn money independently, everything from supplies to software to transportation becomes your responsibility. What many don't realize is that with responsibility comes the ability to claim deductions that significantly reduce taxable income. The truth is that most casual hustlers overpay in taxes simply because they do not understand which expenses qualify or how to record them properly. December offers the final stretch to gather receipts, analyze spending, calculate quarterly tax obligations, and make final purchases that count toward this year's tax return. One of the most impactful December strategies for side hustlers involves evaluating business expenses accumulated throughout the year. Many people wait until tax season to separate personal and business costs, leading to confusion, missing receipts, or forgotten purchases. The better approach is to use December as a cleanup month. As the final days of the year approach, this is the ideal time to review bank statements, look through payment apps, and compile all spending related to one's side business. Doing so not only prevents oversights, but often reveals deductions that were forgotten, such as subscriptions, equipment upgrades, educational resources, or supplies. The IRS allows business expenses that are ordinary and necessary for running a business, but many hustle workers underestimate how many of their tools fall into that category. December is the time to take stock and ensure everything is accounted for before year end. Another powerful December tax strategy involves making strategic purchases. Because the IRS bases deductions on the calendar year, anything you buy for your business before December 31st counts toward this tax year. This means side hustlers can reduce their taxable income by purchasing tools or equipment they know they'll need in January anyway. This might include software renewals, laptops, cameras, phones, office supplies, marketing materials, or education that directly supports growth. The key is not to spend money recklessly, but to invest in things that will genuinely support the business in the new year. Many entrepreneurs use this moment to upgrade aging equipment, purchase tools that will increase efficiency, or secure annual subscriptions that come with discounts. When approached strategically, these year-end investments reduce the tax burden while strengthening the business. December is also the final opportunity to contribute to tax-advantaged retirement accounts. Many side hustlers don't realize that retirement contributions offer one of the most powerful legal tax shelters available. Traditional IRAs, SEP IRAs, and solo 401k accounts allow business owners to lower their taxable income while also building long-term financial security. While some accounts allow contributions up until tax day, many people find that December is the best time to calculate what they can realistically contribute. For those who had a profitable year with their side hustle, maximizing retirement contributions can lower taxes dramatically. And because retirement accounts compound year after year, the benefits extend far beyond a single tax season. Side hustlers who take retirement planning seriously often find that they pay significantly less in taxes than those who ignore it until the last minute. Quarterly taxes also come into sharp focus during December. Unlike traditional employees, independent earners are required to make estimated tax payments throughout the year. Many side hustlers, especially those who are new to the process, underestimate how much they owe and end up facing penalties. December is the time to evaluate income earned during the year and prepare for the final quarterly tax payment due in January. Waiting until the new year creates unnecessary stress, but taking action in December helps avoid surprises and penalties. This moment of reflection also helps business owners understand whether they need to set aside more savings in future months or adjust their pricing or spending habits. December becomes a month of clarity, giving side hustlers a clean break before the next tax cycle begins. For those who experience fluctuations in their side hustle income, December offers the ideal opportunity to consider whether to formalize their business. Many casual earners operate as sole proprietors, which works for small income, but becomes risky or inefficient as revenue grows. Forming an LLC can provide liability protection, and in some cases, electing S corporation status can offer tax advantages. While December is not the only time to make this decision, it is a natural moment for reviewing annual income, projecting future earnings, and deciding whether a structural change will benefit the business. This decision requires careful thought and sometimes professional advice, but December's quiet momentum gives people the mental space to consider the long-term financial impact of their growing side hustle. Record keeping also plays a crucial role in December tax preparation. Many side hustlers rely on apps, spreadsheets, or notebooks to track earnings and expenses, but over time, disorganization can creep in. December is the perfect month to consolidate everything into a clear system. Whether the hustle involves gig economy work, selling digital products, freelancing, consulting, or online content creation, documentation is essential for defending deductions if audited. The IRS requires proof, and December is the final chance to gather it before the year closes. Organizing receipts, categorizing expenses, and updating financial logs not only prevents stress during tax season, but also helps side hustlers identify trends and plan more strategically for the next year. Some even use December to switch to better accounting software, automate tracking, or hire a part-time bookkeeper for the first time. Another often overlooked December tax strategy involves mileage tracking. For side hustlers who drive for work, whether delivering goods, traveling to client meetings, or picking up supplies, mileage is one of the most valuable deductions available. However, many people fail to track it accurately throughout the year, leaving money on the table. December is the final chance to reconstruct mileage records, review mapping data, or use apps to estimate business miles driven. The IRS standard mileage deduction can result in a substantial reduction in taxable income for those who drive frequently. Even those with remote side hustles may qualify for limited mileage deductions if driving is part of occasional business activities. December's reflection period makes it easier to gather details before they become too distant to remember. Charitable giving also becomes a meaningful part of year-end tax planning. Donations made before December 31st count toward the current tax year, and for side hustlers who itemize deductions, contributions can lower taxable income. Many small business owners choose to support causes aligned with their mission or local communities. While not all side hustlers itemize their taxes, those who do often use December to make final contributions after calculating their projected income and deductions. Even for those who don't expect large deductions, giving strategically improves public image, strengthens community ties, and supports organizations that matter personally or professionally. As the end of the year approaches, December becomes an ideal time to analyze overall profit. Many side hustlers do not calculate their true profit until tax season, but doing so earlier offers clarity. Reviewing revenue, expenses, tax obligations, and year-end deductions allows business owners to understand exactly how profitable their efforts have been. Some discover that they are earning more than expected and need to adjust their tax approach. Others may realize that expenses have been too high and need to streamline operations. December provides the pause needed to evaluate what worked, what didn't, and how to make the next year more efficient. This reflective process often leads to smarter financial decisions, better pricing strategies, and more disciplined tracking habits. Perhaps the most important December tax hack for side hustlers is the mindset shift that comes with intentional planning. Many people treat their side hustles casually, not realizing that from the IRS's perspective, they are operating a business. Approaching December with the seriousness of a business owner changes everything. It encourages discipline, preparation, and financial literacy. It helps people understand that taxes are not a burden, but a system that rewards organization, foresight, and responsible planning. When side hustlers embrace this mindset, they begin not only saving money, but also making decisions that support long-term business growth. As New Year's Eve approaches, the window for tax savings slowly closes. But for those who take December seriously, this month becomes a powerful tool. The actions taken now, whether documenting expenses, making strategic purchases, organizing finances, contributing to retirement, or analyzing profit, can save thousands of dollars in taxes. More importantly, they set the stage for a smoother, more profitable year ahead. Tax planning becomes less of a dreaded chore and more of a strategic advantage, giving side hustlers control over their finances rather than reacting to them. In the end, December is not just a month for holidays and celebrations, it is the financial reset button for anyone earning money independently. Side hustlers who use December wisely can step into the new year empowered, prepared, and positioned for growth, with clarity about their taxes and confidence about their financial future. That was all from us today for this video, folks. For more similar content, make sure to watch our video on 5 stock market myths keeping you broke. See you in the next one.